Just over two-thirds of the companies in the S&P 500 have reported their latest quarterly results, with earnings coming in well above expectations. But investors concerned after some companies lowered their guidance for the current quarter. That's the first quarter. Among the companies reporting today, we got a bunch of them. We've got Under Armour, Molson Coors before the bell, and Activision Blizzard this afternoon. We've also got TripAdvisor, Groupon, a lot of consumer names coming out. Doug Sandler, Riverfront Investment Group Global Strategist, joins us now. Doug, welcome. Good to see you. Let's talk about, I know you don't want to talk about individual companies, that's just fine, but let's talk about what we expect out of some of these consumer names. What will we hear about the strength of the U.S. consumer?
I think the consumer's strong. I think the issue, though, what you're going to see as we get to the tail end of earnings season is, retailers just have it tough. You're competing on multiple fronts, and, what you may actually make sales numbers, but you end up really disappointing on the earnings side because of profitability. So, it's nice to see sales growing, and that's something that we saw in December. But, if you have to give away those sales, that's not a good thing, and that's what we find out in earnings season.
Well, and that's an interesting point because we've seen 71% of S&P 500 companies beating on the top line, 61 on the bottom line, that is, and 61% beating on revenue. So revenue has been the hard thing here, particularly for companies that do business in China. Earnings up 17% year over year, beating expectations. But the game is really first quarter, right? What are you expecting there? And our eyes are riveted, focused on the kinds of forward guidance that we need to hear.
Yeah, one, I would say it's not unusual for companies to come out this time of year and sort of set the bar low so they have achievable expectations. So, companies guiding down or mentioning, concerns about the economy or about trade tensions or whatever it is, I think is totally normal. And that's what CEOs, are kind of paid to do, is you want to set the bar at achievable levels. The good news is if we go into first quarter earnings season, so this would be coming up in March and April, right now, expectations are for flat earnings. So that's a very achievable target for companies.
Yeah, that'll be easier.
My guess is they surpass them, yeah.
That'll be easier. Let's talk about today. I made you focus on the future. Now let's talk briefly about today. What are you expecting in the markets this morning as we sort of digest news about possible deals coming in Washington and questions about the deal with Beijing?
Yeah, I think the S&P's in this digestion zone. So we had, the real sell-off in December. We had the sort of bounce back in January. That bounce back was very strong, recovering basically about 90% of the December sell-off. So that's a real good market sign. And the fact that the digestion process has been sideways movement rather than a retracement, I think is a really good sign. My view is that it's more likely that we retest the October highs than going back and retesting the December lows.
I love that idea. That's a good news. Doug Sandler, thanks for being with us today. Great to see you.